Now look, there's a whole host of other different type of corporate entities out there to pick from. Professional limited liability corporations, those are really good for doctors and lawyers, people with professional licenses, the architects, anybody with a professional license may want to think about a PLLC. And the reason why is because that offers just a little bit more protection between the errors and omissions of multiple shareholders who all hold that same license. So here's an example. If you've got, 4 lawyers or 4 dentists or somebody with you've got a professional license of some kind that's regulated by the state of Texas, you're going into business together, you don't want to be absolutely liable for the errors and omissions, if any, of someone else. Someone has a health scare, a heart attack, and there's a gap in the performance of their job. Contracts don't get complete, houses don't get drawn up, whatever, and some sort of litigation ensues. The PLLC offers a little bit more protection between the errors and omissions of the individual shareholders. Another one that's good is limited partnerships. These are really good for especially land businesses, land-based businesses, large farms, family businesses of some sort, where there is a bunch of heirs possibly, and you need to structure some way in which they're all going to be part of a farm partnership, land partnership, rental houses, any number of these businesses that involve and are based on how land is used, whether it be recreationally, agriculturally, or in residentially, just in ways to generate money where you don't want property split up. So partnerships are, a good way to do that. For example, if grandma and grandpa have, 400 acres out in Hudspeth County, Texas, they don't want to split it up necessarily, but they have 16 grandchildren to leave it to. So how do you figure that out? Well, partnership might be the way. Partnerships cost more to incorporate, they cost more to report on, but they're a good way to keep large tracts of real estate intact with multiple partners. Other considerations: if you're forming a company, get a good CPA. Business lawyers are not CPAs generally, and while they can give good tax advice, good basic tax advice, and some better than others, some are CPAs. But the fact of the matter is you're going to want a good CPA because you're going to have some things to think about in the first year of the corporate existence, and that is whether you're going to elect S Corp or C Corp status, and that needs to be done usually within the first 6 to 18 months, whenever the initial tax returns are coming due for filing. Those decisions need to be made, and they are critical because it'll be dependent on how you want to pay your taxes. Corporations have the benefit of holding all of their assets through a year-to-year basis. They can hold assets in a bank account and not pay taxes on them. The downside is corporations, and this is a lot of people think is a double taxation, and in a lot of ways it is, because there's a tax when the income comes in at first and it's held in an operating account, and then when it's distributed to the individual president, secretary, the officers of the company, when they get their payroll or management fees or however it's structured, they'll get taxed again. S Corps have an advantage here, a disregarded entity under the IRS code, an S corporation, which most LLCs and partnerships and other entities are, unless they make that election, which I was talking about. They are disregarded entities, and it's a pass-through taxation, which means it's only taxed once. The downside is generally whatever's in the operating account at the end of the year cannot be held until the following year. It's just taxed as ordinary income, and that makes it difficult to hold on to capital for future investment, for future capital investment, things of that nature. This is why I recommend highly that you pair up with a good accountant, somebody you trust, that will help guide your business into the best use of revenue, best tax structure, and what's best for you, and if it's just you or you and your other shareholders, members, officers of the company. It's like anything else in life. Being proactive will benefit you and the company better and your shareholders better. So I hope this has been some help. Have a wonderful day.